Now for the word on Wall Street, top investors watching your money. Joining me now, Mendon Capital Advisors President and CIO Anton Schutz. Also with me here on set, Marcus Lemonis. Anton, good morning. We're going to start with you here. Take a look at futures. Final trading day 2025. We have just some slight red arrows here. Markets are going to be closed tomorrow, of course. Stocks ending the year with a third straight year of double-digit gains, driven largely by optimism around AI. Investors reaping strong returns, even with a lot of swings when it came to trade policy and geopolitical tensions and worries about valuations. Momentum did kind of fade late in December. That Santa Claus rally didn't materialize, but AI really defined the market. Alphabet jumping more than 65%, NVIDIA gained 40%, Amazon single-digit gains there, Anton. So with all of that said, from now what's behind us, what is your outlook as we move forward?
Well, I expect the rally to broaden out. I mean, first of all, you made a great point this morning about all the money that Americans are going to get back in their pockets. And I think that that money is going to get spent. It's going to get saved. Some of it go into the markets. And I think GDP is going to be strong. We've got central banks around the world lowering rates. Certainly ours has been much more accommodative, and I expect to be even more accommodative once we've got a change in Fed leadership. So I think we're poised to have a good year, but a broadening year, not just a few companies leading the market higher, but a much broader market, potentially the Russell 2000 outperforming, value certainly cheap, and financials, which I focus on, are incredibly cheap. And we're in an also incredible deregulatory environment. So much regulation was put on corporations. That's going to show up in earnings. It's going to show up in growth. And by the way, all the AI spending, people are building incredible facilities, whether it's power or something else. And then lastly, one of the biggest beneficiaries of AI are banks.
Yeah, well,
right? Think of all the operational things.
Yeah, I wanted to, real quick, that there's a huge push for deregulation in financial services and for banks. And that's really hasn't come to fruition yet, Anton.
No, but it's all coming. It's all going to show up in earnings. It's going to be less employees, and M&A is really happening. And I think one of the biggest things that happened yesterday is the OCC is really taking a look at the size of companies and saying, "Hey, 700 billion plus matters, below doesn't." Yeah. Well, they're all going to race to get to 700 billion. So there's going to be tons of.
Marcus, go ahead.
Yeah, I think the point that Anton was making about AI is the amount of efficiency that businesses are going to start to see. And you look at SG&A, and that some of the labor softening is really coming from what will AI do to some of that, some of those labor models. And banks, particularly, are going to be able to streamline operations pretty significantly.
No, I think it's going to be a real game changer. And I agree with Anton. You're going to see it in the earnings reports sooner rather than later. Marcus, let's talk about the IPOs that could be coming in 2026. There's a lot of excitement about this. You know, a lot of this was delayed by the government shutdown, but bankers are watching for a blockbuster pipeline of IPOs. So here we go. Alphabet-backed Motive. They've announced a 2026 debut. SpaceX is moving ahead with plans to raise more than $30 billion to go public. OpenAI, Databricks, Anthropic. All of these are being considered for 2026, Marcus.
Well, here's what's interesting. The ones that you're hearing about are big numbers, and they're all in either the AI or some technology space. You're not hearing traditional IPOs like you would before around retail. When you look at OpenAI, that one probably is at the end of 26, potentially the beginning of 27. And you look at SpaceX, these are big numbers. But I want to start to focus on some of these other ones in the blockchain or crypto space, like Kraken, who are finally going to start to unpack the ability for consumers to invest in this particular space. That's probably going to unlock more value. I think blockchain and crypto could be the AI story of 26.
Bigger than, like we were just showing SpaceX. I mean, because there's a lot of excitement about SpaceX.
Yeah. SpaceX is exciting, but I think at the end of the day, where consumers are going to put their extra money in things that they can understand, they can invest in, and they believe are going to change their life, SpaceX is going to be largely institutional. All the money that's going to come back into the market from refunds and index funds and things of that nature, I think you're going to find themselves in blockchain and crypto in 26.
Okay, yeah, no, that's been a big push for this administration in 2025. Let's take a look at yields this morning. The December Fed minutes did show officials were sharply divided about the cut for December. Several called the decision finally balanced. Policymakers saying more cuts could come if inflation eases further. Others are favoring holding rates steady for some time, and they are signaling kind of this pause in January, but the minutes really highlighted upside risk to inflation, downside risks to the labor market. Anton, what did you make of the minutes?
Well, I mean, I completely agree, right? The Fed's dual mandate has got a problem, right? You've got a little inflation still left. You've got people losing jobs. AI certainly responsible for some of that. So how do they solve that? They really have an issue here. I think inflation calms down. I think the tariff stuff is largely behind us. I know we have the Supreme Court ruling. Trump administration will find ways around it, but you don't have iterative process, right? You don't have inflation on tariffs. It's a one-time thing. They may get lowered as other people play nice with us. So I don't think inflation's an issue. I think they'll focus on labor, and I think they really need to focus on housing, right? We've got to find an affordability issue, and the best way to do that is to drive long rates lower. So you may have operation twists and things like that, where the Fed, instead of buying short-term treasuries, actually changes its modus and buys long-term treasuries, not necessarily increasing the balance sheet, but allowing long rates to come down, allowing people to refinance, allowing people to afford new housing.
And I'm glad that he said it.
I am too. Marcus, go ahead.
There is only one unlock that will change the economy in 2026, and that is the 10-year Treasury breaking 4%. We continue to sit around this 4.1, 4.2 range, and Fed rates can continue to drop. But if that 10-year Treasury doesn't drop, we don't get the mortgage relief that we need. We don't get the housing starts that we need. We don't get the refinancing that we need. And that's all part of the affordability piece when you're talking about giving people more money back into their wallet, period, end of story.
Yeah, and that's going to be those returns. But again, the Fed can do, they can do rate cuts, but again, I'm so glad you brought up the 10-year, Marcus. I think that is the real key here, and I agree with you 100%. And portable mortgages. I'm going to keep, that's my New Year's resolution. Get that across. He's shaking his head. We'll talk about that in a bit.
Yeah.
Anton Schutz, it's great to see you. Marcus, of course, is going to stay with us all morning long. Happy New Year, Anton.
Thanks, Anton.
All right.
Happy New Year.